Hello, everyone. David from Mortgage Choice. It is Tuesday, the 18th of June, and the Reserve Bank announced this afternoon they were keeping interest rates on hold, which is fantastic for those of us that have mortgages or for those that are hoping to have one soon. Let's get stuck into the announcement and what we're going to cover off on this afternoon. So today I just want to run through the media release by the Reserve Bank. We'll cover off on inflation and where that's at. We'll talk a little bit about some options for first home buyers and upgraders and what they need to be considering if they're in the market for either of those. We'll talk about current interest rates, and then I'll take you through a couple of calculators and show you how we could potentially improve your cash flow and reduce your repayments. So on the Reserve Bank announcement, it's a fairly easy statement to read through. If you're interested, just type into Google RBA statement and it'll pop up. But essentially, they're concerned about inflation still, that it remains above its target band and it's proving persistent. So we did see inflation dropping steadily up until December of last year. And since December, it's kind of sat in that 3.5% to 4% range, and they want it down in the 2% to 3% range. To put that into context, this chart here should show you what they're hoping to achieve. So this purple bar that you see from, say, the mid-90s through to 2022, that was the 2% to 3% target band that they wanted to keep inflation at. And you can see this blue bar ticking up here. This is inflation peaking towards the end of last year. And then coming back down, but it hasn't come down far enough. We're not quite at that target band. So that's the concern that the Reserve Bank has. They went on to say in their announcement that the outlook remains highly uncertain. There are a number of factors that they're looking at that help them determine where to position interest rates. A lot of it has to do with the economic stability and the growth of our economy. It has a lot to do with inflation and the world as a whole, and looking at other countries and how they're progressing through their concerns of inflation. So it's all tied together, and there's so many factors that go into these decisions that not just one outlier will determine, but obviously inflation is driving their main concerns. Now, for first home buyers, just a couple of things. If first home buyers out there and they're not aware of the first home guarantee scheme, they need to give us a call and book in a meeting and run through how that scheme might benefit them. It's the best first home benefit that I've seen since I've started as a broker back in 2007. It's a fantastic scheme. It helps clients avoid lender's mortgage insurance, but more importantly, it helps reduce the savings required. So it helps you speed up that process to get into your first home, because instead of $50,000 to $75,000 as a deposit, you might only need $20,000 to $25,000 as a deposit. So it really helps accelerate the first home buyer's entry into the market. And pre-approvals, they are super important and they take time. Pre-approvals allow the bank to assess you as a borrower and confirm your borrowing capacity and confirm that they're happy to lend to you, so that before you go out and start shopping for a house, you get confirmation from the bank that you're good to go and that you can purchase what you're hoping to achieve. Now, they take time. So if we got a phone call on a Monday saying, hey, we're going to auction this Friday or this Saturday, can we get pre-approval? The likely answer is going to be no, we don't have enough time. To do a pre-approval, we've got to submit a full application to a bank, and banks don't make pre-approvals a priority. So they take time. Normally we're looking at 2 to 3 weeks to get a pre-approval in place. So highly recommend for first home buyers to reach out to us, book in a meeting, and we'll run through the first home guarantee scheme and the benefits that are available there. And then we'll talk about potentially getting a pre-approval in place if you think you're ready to purchase. For our upgraders, a lot of upgraders back when interest rates were sitting at 2 or 3%, a lot of upgraders were keeping their existing home, turning it into an investment property, and then going off and purchasing their next home. And the convenience that allowed was that you didn't have to worry about transitioning from one house to the next, because you were remaining in your existing home. You were going to keep that home. You purchase the new home, and then you just transfer over as leisurely as you'd like. Nowadays, because interest rates are so high, it's requiring upgraders to sell their existing home so that they can afford the purchase of the new home. And that means that we need to then focus on, well, how do we physically get you from one house to the next? How do we work out the timing? Do you sell first and then buy? Do you buy first and then sell? And those decisions are impacted by the two main options we have for transferring and knowing the difference between a simultaneous settlement and bridging finance. Both serve a purpose and both have their pros and cons. So just like first home buyers, it's important if you're looking to upgrade to book in a meeting as early as possible, even when you're just considering the option of upgrading. Maybe you're still 6 or 12 months away. Still book in a meeting so that we can run through your options and see what might suit you best. Now, current interest rates for an owner-occupied loan, we're looking at 5.99% as the absolute lowest interest rate possible. And these are with a couple of smaller lenders, and they're not for everyone. The majority of our good variable rates are sitting at between, say, 6.05 and 6.2% for mainstream lenders that everyone would be familiar with. For investment loans, we're looking at 6.24% for a starting point on a investment principal and interest loan. If you're looking at interest only, then there is a higher premium for those. And did you know, and I'm assuming that most mortgage holders would be aware, that the more equity you have, the better interest rates you can get. So if you, for example, took your loan out 5 years ago and you haven't reviewed it, you haven't spoken to us in 5 years, your property is likely increased in value by quite a bit, which means that when we go back to reprice you and get discounts, we usually can get better discounts based on that increased value in your home. Now, that's it for this side of the presentation. I might slide over and we'll talk a little bit about cash flow and how to potentially lower your repayments. So let's see if this works. What you're looking at now is just an easy calculator on the benefit of just improving your interest rate. So if you've got a $500,000 mortgage in this example and your interest rate's at 6.45%, well, that's not a very competitive rate right now. And you're likely able to call up your existing bank and get that down to, say, 6.2%, for example. And if you manage to get down to 6.2%, then you're going to save yourself $82 per month. Now, it's not a huge amount of money saved, but it's $82 better off in your pocket. And oftentimes, clients are able to call up their existing bank and get this discount on their own. So you just call them up, you say that you've watched this video from an amazing mortgage broker in Barrick, and he's mentioning that you can get between 6.05 and 6.2% on the rate. You want your rate to be lowered, or you're going to refinance, and just see what happens. Usually that 5 or 10 minute phone call with the bank means that you get a lower interest rate and therefore a lower repayment. All right, so that's one way that you can help lower your monthly payment. The other way is to increase your loan term. Now, this goes against a lot of people's philosophies on mortgages. Obviously, you want to get your loan paid down as fast as possible so that you reduce the amount of interest that you're paying over the life of the loan. But special times call for special circumstances, and this might be a situation when we've got relatively high interest rates. This might be a situation where, to get you through until interest rates start to come back down, maybe you look at extending your term back from, say, 27 years to 30 years, because that will give you a lower required repayment. And in this example, if you had a $500,000 loan on a 27-year loan term at an average interest rate of 6.22, you've got a repayment just under $3,300 per month. Now, if we take that same mortgage and we spread it back out over 30 years, it lowers your repayment by $220 per month. So a decent sized savings just by extending your loan term. Now, you can still be as aggressive as you want with this new 30-year term. If you want to continue paying it off at the same rate that you're paying off the current 27-year term, you can. And then you've always got the flexibility of falling back to the smaller required repayment if cash flow ever got to be an issue. So just another way that you can potentially decrease your cash flow and get a bit of savings each month. Just comes with the caveat here that you are extending your loan term and therefore paying more interest over the life of the loan. Now, the other option that you can consider is debt consolidation, and this has its own caveats and concerns as well. But the idea being that you take a $550,000 mortgage, a $40,000 car loan, and a $10,000 credit card, so a total of $600,000 of debt that's currently costing you $4,900 per month, and we roll that into a mortgage for the same $600,000 with a repayment of $3,675. So you've benefited by about $1,200 per month in cash flow savings, because we've consolidated all of your debts. Now, we have taken a car loan and a credit card and we've put that over a 30-year mortgage. So obviously that's not ideal. But what we're trying to do is show clients examples of if things were tight and you were finding that things were getting close to the breaking point, well, this is a way that you could help alleviate that pressure for a period of time. All right. If you've got questions, concerns, always happy to have a chat. Sorry for the long video, but hopefully you benefited some way from it. And yeah, we'll speak to you guys in the next announcement. I believe that's in August. Thank you.